Yeah, I felt pretty good about what they just turned in. The numbers on the top line were exactly what we all expected. They were up 3% in the U.S., and we thought that would be the case. We thought 5% growth was what they would see, and we thought 4 might be good, and 5 is where they came in. So we were happy with that. The real number here that they missed on is the gross margin line. We knew that was going to be tough. We wanted to see them pull up gross margins by about 100 basis points because we knew SG&A was going to be a problem. Their costs were going to rise, and so that was what we saw happen here. So if they'd have pulled a little better gross margin number, that 7 cents on the bottom line would have been 13, and we'd have been a lot happier. However, to me, this looks like Levi's is still winning. As long as you're getting that good top line growth and you're getting it internationally, they'll get the gross margin line fixed. The SG&A line is going to take care of itself as the business continues to grow. I'm really not concerned at all here. I was going to be really happy with top line of 4%. They got 5. I was going to be really happy with 100 basis points of gross margin improvement. They didn't get it. I'm satisfied with what they did on expenses. So I think they'll just fix it as we go along. It takes a while to get everything working just right, and they're continuing to work toward that. But it's a great brand. They're moving online. They're doing all the right things. They're getting good international growth. Their exposure in China as far as bringing goods into the U.S. is extremely low. They're not going to get hurt on tariffs. I'm a big fan.
So why not affected by the trade war? Simply because they're predominantly U.S. exposure versus your point, though, that they're getting good international growth?
Well, they're getting good international growth, and where it comes from for international, you don't get tariffs on, and only 8% of what they're bringing into the States is coming out of China, and that will drop dramatically over the next several months, and it'll drop even more over the next year. So I just don't think it's big enough to matter. I think what matters here is, can they continue to drive top line? Can the brand continue to carry its weight? And it looks to me like the top line is doing fine, and now it's just some of the internal tweaks you have to do to get all the rest of the numbers to flow the right way. But I don't see this stock being under real pressure here. They were sitting at, what, $23.50? Most of the world thinks they're probably a $26 stock. Do I think people think that's different because of today's release? I doubt it.